Okay, let's dive into this. Imagine a company, maybe not one you immediately think of for cutting-edge crypto stuff,
Right.
and suddenly they make this huge move, planning to buy a massive amount of Ether,
Yeah.
like potentially $1 billion worth.
Yeah, that kind of news definitely makes you stop and, pay attention. It's a big deal.
It really is, and that's what this deep dive is all about, SharpLink Gaming. They're mostly known as a U.S. sports betting platform, right?
That's them. And they've just put out this SEC filing that outlines a really, really ambitious plan involving Ether.
Exactly. So our mission here is to unpack what that filing actually tells us. We want to get into the scale of this ETH purchase plan, but also the why. What's the strategy? What are the risks they see? And how is the crypto community reacting? What does this whole situation tell you, listening, about how companies might be looking at assets like ETH now?
Good plan. So where do we start? The filing itself.
Yeah, let's start there. SharpLink Gaming filed with the Securities and Exchange Commission, the SEC. What was the headline news in that document?
Well, the big piece was their plan to potentially offer up to $1 billion in shares, common stock.
Okay, $1 billion in stock. That's already pretty significant for a company like SharpLink.
It is, but the real kicker, the part that's getting all the attention, is what they intend to do with that money.
Right, and what did they say?
The filing is actually quite clear. It says they plan to use, and this is the quote, substantially all of the proceeds from this offering to acquire Ether.
It's substantially all of potentially $1 billion just for ETH. Wow, that's quite a pivot, especially when, the source mentioned ETH was around $2,516 at the time. $1 billion buys a lot of Ether at that price.
A huge amount, yeah.
Did they list anything else they might use the funds for, or was it all ETH?
Well, they did include the usual sort of corporate language, things like working capital, general corporate purposes, operating costs, even their core affiliate marketing business, standard stuff.
Okay.
But the document really emphasizes that the primary goal, where most of that potential billion is aimed, is buying Ether.
Gotcha. Now, this didn't just come out of the blue, did it? There was some context leading up to this filing.
No, absolutely not. It fits neatly into a narrative they started building just days before. This SEC filing came right after their May 27th announcement.
Right. What was that announcement?
That's when they first said they were launching an Ethereum-based corporate treasury strategy. So you see the connection. The announcement sets the strategy.
And the filing lays out the plan to fund it, the nuts and bolts.
Exactly. The stock offering is the mechanism to get the cash for the ETH treasury.
And speaking of strategy, there is another connection mentioned in the source that seems, pretty significant. Ties them even closer to Ethereum.
Oh, yeah. That's a really key piece. The source highlighted that SharpLink nominated Joseph Lubin.
The Joseph Lubin, Ethereum co-founder, founder of Consensus.
That's the one. They nominated him to be chairman of their board of directors.
Wow. Okay, that's not subtle. That's a very strong signal about where they see their future, right? Deeply embedded in the Ethereum ecosystem.
Absolutely. It screams commitment to Ethereum.
So let's recap that sequence. You've got the announcement of the ETH treasury strategy. Then you get the nomination of a major Ethereum figure like Lubin to lead the board. And then this filing drops, detailing the plan to raise maybe $1 billion to buy ETH.
Yep, that's the timeline.
How did the market react? Specifically, SharpLink stock. Must have moved.
Oh, it moved all right. Dramatically. Yeah. The source says their stock price surged, get this, 400% during trading on May 27th.
400% in one day.
In one day. The same day they announced the ETH treasury strategy. So clearly investors were either very excited or, speculating heavily on this shift.
Makes sense. Now, this is where it gets really interesting, especially if you're trying to understand how companies are actually thinking about holding crypto. SharpLink, in this very filing where they announced the big ETH buy, they also talk about risks.
Yes, they do. They are quite upfront about potential challenges associated with this move. They're not just painting a rosy picture.
That's crucial. So what kind of risks did they highlight themselves?
They mentioned a couple of big ones. First, the potential rise of central bank digital currencies, CBDCs.
Okay. What's the worry there, according to them?
Their concern, as they put it in the filing, is that CBDCs could eliminate or reduce the need or demand for private sector-issued cryptocurrencies or significantly limit their utility. Basically, government digital money could muscle out things like Ether.
Okay, so competition or just making ETH less relevant, that's a significant macro risk to acknowledge. What else?
The other major risk they flagged is the ongoing uncertainty about how Ether might be classified by regulators. specifically the possibility of it being labeled a security.
Right, the perennial question. And what would that mean for them?
They stated pretty clearly that if ETH were deemed a security, they'd have to comply with a whole load of additional regulations. More hoops to jump through, more compliance costs, potentially impacting how they can use or manage the ETH.
This is fascinating because they're putting forward this potentially billion-dollar investment plan while telling the SEC and their own potential investors, hey, be aware there's this regulatory cloud and CBDCs could disrupt things.
Exactly. It shows they're aware of the hurdles, they're laying out the ambition, but also the potential roadblocks they see on the path.
Which naturally brings us to the crypto community. A move this big, this bold, involving Lubin, it must have generated some buzz. How did people react?
Oh, it definitely sparked a lot of conversation. And a very specific comparison started popping up almost immediately.
Let me guess, Michael Saylor.
You got it. People instantly started comparing SharpLink to Michael Saylor and MicroStrategy, but, for Ethereum.
Right, because Saylor is so famous for MicroStrategy just relentlessly buying Bitcoin for its corporate treasury. Huge amounts.
Exactly. He really pioneered that whole corporate BTC treasury strategy. The source even gives the figures MicroStrategy holding something like 580,250 Bitcoin, valued at over $60 billion at the time. Just massive scale.
So the comparison is basically saying, is SharpLink going to be the Ethereum version of that?
That's precisely the sentiment. They're seeing this as potentially the start of something similar for ETH.
Did the source mention any specific reactions or quotes capturing that?
Yeah, a couple. Crypto analyst Ciro Expobushanti apparently tweeted, Ethereum finally has its own Saylor.
Okay, pretty direct.
And Anthony Sassano, who's a well-known Ethereum educator, just put out, you are not bullish enough, seemingly reacting to the sheer scale of SharpLink's ambitions.
Right. Those quotes really capture that excitement, that hope maybe within the ETH community that this could kickstart broader corporate adoption, similar to what Bitcoin saw.
Definitely reflects that sentiment.
Now, this move by SharpLink doesn't exist in isolation, right? The market for Ether and crypto exposure is always moving. There was some other related news around the same time.
That's right. The source also touched on another filing, this one by an ETF provider called RAX Shares.
Okay, what about them?
Well, their filing has analysts buzzing about the possibility of the first U.S. ETFs that actually include staking for Ethereum and maybe even Solana launching soon, potentially within weeks.
Staking ETFs. That's been a tricky area, regulation-wise.
It has, and the interesting bit mentioned is that analysts think the REX shares might be using some kind of regulatory workarounds to get the staking component included. That's been a hurdle for others trying to launch similar products.
So that adds another dimension. You've got SharpLink going for direct, massive ETH ownership for their treasury.
While navigating the known risks themselves, yeah.
And then you've got the traditional finance world, the ETF providers, still working on different ways to package ETH exposure for investors, maybe even finding clever ways around regulatory sticking points like staking.
Exactly. It shows there are multiple angles, multiple ways institutions and companies are trying to engage with Ethereum right now. It's not just one path.
Okay, so let's bring this all back to you, the listener. Why should you care about this SharpLink story? First off, what does this specific situation, this potential billion-dollar ETH buy, signal about corporate interest maybe shifting or expanding beyond just Bitcoin?
Well, I think it clearly shows that the corporate treasury idea isn't just a Bitcoin maximalist play anymore. SharpLink's move, especially bringing Lubin on board, suggests companies might be looking at Ether specifically, maybe for its utility, maybe for the ecosystem, maybe staking yields, not purely as a digital gold substitute. It broadens the conversation.
And what about the risks? The fact that SharpLink themselves pointed out the dangers of CBDCs and the security classification. What's the takeaway there?
I think that transparency is super insightful. It tells us that companies making these big bets aren't naive. They know about the regulatory fog. They know about potential disruptions like CBDCs. They're factoring these risks into their calculations. It gives you a much more realistic picture than just pure hype.
Right, it's a calculated risk, eyes wide open. And finally, that community reaction, the whole Ethereum Saylor thing, what does that tell us about the wider sentiment?
It really underlines the hope, the strong desire within the Ethereum community, and maybe broader crypto, to see other major assets attract that same level of serious corporate interest that Bitcoin has enjoyed, thanks to MicroStrategy and others. It's a sign of optimism that this could be a watershed moment for ETH adoption.
So let's just quickly sum up what we've covered in this deep dive. We looked at SharpLink Gaming's really bold plan, potentially raising $1 billion through stock to buy Ether.
Yep. tying it to their new ETH treasury strategy and that significant move of nominating Joseph Lubin as chairman.
We saw the market's explosive reaction, that 400% stock jump, and we dug into the risks SharpLink themselves flagged in their filing CBDCs, the security classification issue.
And we touched on the community buzz, drawing that comparison to Michael Saylor, calling SharpLink Ethereum's own Saylor, reflecting hopes for wider ETH adoption by corporates.
It's really a fascinating snapshot. Corporate strategy meets crypto specifics, meets regulatory reality, meets community hopes, all in one filing.
Absolutely. A great case study.
Which leads us to a final thought for you to chew on. Think about this. SharpLink put it right there in their official SEC filing. Hey, CBDCs could hurt demand for crypto like ours, and we might face heavy regulation if ETH is deemed as security. They acknowledge these big potential problems.
Right. They didn't hide from them.
So given that they flagged these major hurdles while simultaneously planning this potentially massive billion-dollar investment, what does that contrast tell you? What does it suggest about their long-term conviction in Ether, maybe? Or just their willingness to navigate really significant known risks to execute this strategy? What signals does that send about how some companies are approaching the crypto space today?